Yeah, Tesla's really interesting. I was talking about this last night in Discord. And again, I'll preface this by saying I have nothing but respect for our overlord Elon Musk. Just in case I get in trouble. Look, the auto business I think is below expectations. There's no easy or hard way to say that. There's no easy way to say that. And if you look at Toyota, it's 8 times earnings. What's up? Humphrey. Yeah, WeRide is kind of nuts.
Autofill.
Yeah, so getting back to Tesla. Sorry, got distracted. Yeah, so basically, Elon successfully convinced the market to pay for robotics. And, if Elon tells you that robotics is going to make auto look small, it's like the world's biggest startup. It's publicly traded. You have an auto business, but, even if you assume the auto business is worth as much as Toyota's $300 billion. You're paying an extra $700 billion for Elon. It's a lot. Can Elon create $35 billion in earnings, call it 20 times earnings for the 700? You're already implying that he's going to create, that much in earnings. And so you can almost estimate how many units of robots he has to sell. Basically, has to sell 1 million robots a year at $70K a year with a 50% net margin, 20 times earnings at steady state. So you are already paying for 1 million robots a year. Right now they sell 0. And I assume Elon will sell some robots at some point. I'm not including Robotaxi. I'm not really including self-driving. Although self-driving, software has not been much of a boost yet to Tesla. So, as they sort of shift from auto to software, I do think margins will rise. So with all that said, maybe Robotaxi's worth another $100 billion. I don't know, maybe more. But Uber's going to compete there. Waymo's going to compete there. I think Elon's further ahead on robotics, and I trust Elon's ability to commercialize a lot better than Boston Dynamics. So, it's easy to realize what's priced in, and this is my implicit DCF method. I'm just doing it in my head, but if you have $1 trillion company, the biggest auto company is $300 billion. That's Toyota. It's 9 times earnings, by the way. Maybe Toyota should be 9 times earnings and Tesla should be bigger, in which case you could argue the max valuation for the auto business is not $300 billion, it's higher. But I think it's okay to just say, look, let's say Tesla Auto is worth $300 billion, which again, Toyota sells a lot more cars than Tesla. It's pretty generous, and it's a very efficient company. They kind of invented quality manufacturing. So, maybe we shouldn't be comparing ICE and EV. Maybe ICE is just less profitable and less exciting, and EV should have a higher multiple. But they would also have to start selling more cars. So I think 300 max for the auto business is fine. So let's assume that. And then, so basically you're paying 700 billion for other stuff, right? If you believe that the max the auto business could be worth is, and I'm just talking about the bare metal, then the bare metal, then you're talking about, you're paying 700 billion for other stuff. Now, other stuff includes, Robotaxi. It can include robots, etc. But that's basically the idea. Let's look at TM is Toyota in the U.S. It's 7203 in Japan. But yeah, it's this is 1 second. Tesla's about 100 times earnings. Okay, so when you buy a share of Tesla, you value Tesla at $1.2 trillion. Okay, that equals 1,200 billion. Toyota, let's say, is worth 300 billion. And if we assume that's the max that Tesla's auto business could be worth, which is, it's a major assumption. I think Elon would argue with that assumption and say, no, that's not true. My auto business can be worth $1 trillion. But let's just say that's the case for now. Again, the auto business isn't really growing for Tesla. Can it grow again? I'm sure it will. But, yeah, and I think Mountain Shark could be right. I'm not saying I'm bearish on Tesla, by the way. I just want to be able to wrap my head around it, if that makes sense. And we can open the Tesla model too, by the way. Oh yeah, I forgot I have to go do the git push. Push the push. Ay. I got all these hoes in my DMs, man. It's over for you hoes. I'm retired. I'm not doing that shit no more. Gotta find somebody else to satisfy you. I'm out the game. Go call Elon. Yeah, we'll go through all that in a second. Let me just upload the model. MOB. Okay, we're ready. It's the problem with working on multiple computers all over the planet. Okay, so let's go. Do not make a nibble coin. I will shit on it. All right, so Tesla is 30 billion in cash as well. 23 billion net. Okay, so let me see if we can do it like this. You get 23 billion as well. in cash. What do you get on revenue for auto? So auto's around 80 billion. Net income's around 7 billion. So let's look at it a couple different ways. So 7 billion net income. And you know, we could look at free cash flow too. TTM free cash flow, call it 11 billion. So either way, let's put, I don't know, what do you want to put on that? 40 times? You know, again, it's hard because Toyota trades at 8 times. But like arguably again with ICE, you're dealing with a really different kind of car. You have a lot of technology that Tesla could scale. And again, we're not going to value FSD this way. Yeah, you know, you have to value each business separately. When you just value auto, you know, you have to think about what am I willing to pay for an auto company? And is ICE that much different than EV? And, you know, there is this sort of similarity. A lot of it's the same. You know, you got to make a windshield, you got to make a chassis, you got to make the doors, you got to make the seats, you know, all that. But, you know, the battery is where the battery versus the engine is a pretty big difference. Yeah, S24, listen, I am not an idiot. I don't know if you understand this, but I am an expert in valuing companies. And so we're going to value each part of Tesla, all right? And we're going to try to understand what each part is worth, and then we're going to add it up. Do you understand? Does that compute? Okay. Some of you guys are thick-skulled. So is the difference between ICE and EV, ICE and EV worth paying a bit of different multiple? That's sort of question one. You know, but that's not the only question. The next question is growth, right? If Elon were here, he would say, Martin, I'm not done growing. And I would say, yes, Elon, that's true. You know, Tesla's still very early on its journey. You know, there's still a lot of things that they want to do. And again, pure auto. We're going to value the other shit later. I'm just talking about pure auto. So he would say, if he were here, look, I haven't even come out with 1/10 of the amount of cars I want to come out with. And, you know, that's probably, you know, probably true. You know, you could come out with new kinds of cars. You could come out with sort of non-passenger vehicles like buses or something like that. So there's still a lot of models they can put out and, you know, other things like that. They could grow Cybertruck. You know, Cybertruck V1 didn't do that great, I don't think, but Cybertruck V2 could be really great. They could do a really high-end car. You know, there's a lot more that they're planning on to grow the car business. So you wouldn't want to pay. It wouldn't be fair to pay 8 times earnings for something that's going to grow a lot. You know, so I think that's a reasonable way to look at it. Now, pivot to other stuff. It's a whole different question, right? We're not thinking about that yet. We will think about other things in a second. We're just thinking about the pure car business. What is it worth? Not even including FSD. We're just saying, selling these hunks of metal, what is that worth? And I would say the better argument here is not EV versus ICE. I think the margins are a little better for, you know, for EV, but we're still looking at cash flow. We're trying to value the cash flow, right? So if we say the 11 billion, and we're saying 40 times because we think earnings could double or triple based on operating improvements and new cars over time. So I'm going to be generous and say the car business is worth 40 times today's cash flow. And that, I think most people would say that's fair because ultimately, even though Elon's got this unparalleled track record of execution, right now, you know, the car business is not really growing. So that is sort of where I'll come out on that. So if you take those two things, which is cash in the bank and what the car business is worth, and again, you could do this yourself, do this at home, and say, you know what, Martin, I think you're wrong. I think we should pay 80 times for the car business because it's going to grow really fast. Because I know, I've done my research. I read Electric every day. This is a cool thing. I read this in jail. My dad, rest in peace, used to send it to me. Okay, yeah, I'm about to not see it, but yeah, here it is. Electrek.co. So this is a company that just follows EVs. They're very good. If you're just like, I listen to all the EV podcasts, I follow this stuff really closely. I know all about this stuff, and you say, hey, Martin, you're wrong. You know, they're going to 10x their car business. So I'm willing to pay 100x or 200x, and that's fine. Or maybe you're more bearish on it. You say, I'm not going to pay more than 10 times earnings for that car business. And oh, by the way, your earnings number's not right. You know, if you look closely, this should be 6 billion or 3 billion and not 11. Fine. But that's the number I'm using right now. And it does not have to be like some holy number. You know, I really don't want you to think about valuation as, you know, you multiply 3 times 3 and it's 9 and it's unchanging. You know, that's not how it works. You know, I think the Graham Dodd school wanted you to believe that, but the reality is this is more of a philosophical tool than some kind of monolith that we were going to pray to. You know, this is very different. So you could put big ranges on this. You could say, all right, well, maybe it's 200 to 800. And let's think about that later. Let's just pencil that down for a second. Okay. So in any event, we got that and we're happy. So basically, we now have to decide, you know, we just do the subtraction and we say, all right, well, you are paying $737 billion for the other stuff Tesla has. And if you believe the car business is worth less, say $240 billion instead, then you're paying $900 billion. If you're a bear on the car business, and let's say you really understand that car business, and you're sure it's worth $240, then you're paying $900 billion, because this is the market cap of Tesla, right? It's $1.2 trillion. But if you say, you know what, I know it's worth $840 billion, I'm really an expert in cars, then you're only paying $337 billion for the other stuff. And I say only $337 billion would be one of the biggest companies in the world. But you know, we are talking about one of the best entrepreneurs in the world. So maybe that makes sense. So what are we paying $737 billion for? Well, let's take a look. There's a lot of stuff, actually. So the first is, let's do Robotaxi, because I think that's a really exciting thing. I think that Uber and Waymo are going to make a ton of money. The idea of a professional driver is going to be as antiquated as like a horse carriage driver. Like, nobody's going to ever. We're going to tell our grandkids, like, yeah, there used to be a guy that would sit and drive you around, and they'd say, what happens if that guy passed out or he was drunk or something? They're like, well, we die. We basically die. And you know, that was something that, you know, happened way back when. So Waymo's worth, you know, around 50 billion. You know, so Waymo's, you know, well-funded, kicking ass. So maybe the number for Robotaxi is 50 billion. Okay, but Waymo doesn't really have any cars. You know, and making these cars is not easy. Whereas Tesla's got a lot of cars. It's got a big moat. Okay. Well, now how about Uber? Well, Uber's publicly traded. You can just look at the market cap. I think it's like 150, 160. And, you know, 168. But let's open our Uber. We have an Uber model. Here I'll show you why. And I hope we clip this because I could send it to Elon. Clip this, chat. So whoever likes to clip these Shkreli clips or Shkreli Planet or whatever, you know, feel free to clip it and, you know, do a really good job. Put an extra effort, and I'll shoot it over to Elon and see what he thinks. But make it really quick because, you know, I don't think he wants to sit and watch something for half an hour, but try to get it to all work out in 5 minutes or something, even though it'll probably take an hour. Okay, so Uber's 80 bucks, 168 billion. But here's the important thing. Take a look at these bookings, all right? So you have mobility bookings. And probably you can throw in delivery because the bulk of the cost of delivery is the guy bringing the thing over. But let's just do mobility. Okay, so mobility is 80 billion in bookings. Their take rate is, that's 80 billion for 2 quarters. Well, it's 80 billion for 2 quarters. 80 billion for 4 quarters, actually. Let's make it, I don't know, let's put it here. Take rate. So this is revenue divided by the actual charge. So they report the revenue. They're only taking 30%. It's actually a lot more than they used to, I think. 30% of the ride, 70% goes to the driver. So theoretically, if Uber took 100% of that, or maybe they give Tesla 10% or something like that, you can imagine how the numbers change. I mean, it would be absurd. And in fact, we can do exactly that. So what we can do here is we can add this back and subtract this. And we're going to see how do these earnings change. So the earnings were 1 billion before. They're 17 billion now. So it would turn Uber into one of the most valuable companies in the world. And if we say that's 4 quarters and 15 times earnings, it's $1 trillion, $814 billion company. If they could replace that take rate. And that's why Travis Kalanick was so focused on autonomous vehicles, because he knew that almost all of his, revenue and earnings were going straight to the driver, which makes sense. There's no ride without the driver. But if you take the driver away, look at how the earnings, go to infinity basically. And you could even, lower the price. There's so many things you could do. So you could argue with a straight face that Robotaxi is somewhere between 50 billion and 800 billion. Okay. And, just to be conservative, I'd put it a little bit towards the bottom half of that. But I don't know, let's say it's 250. Because again, you got a guy who knows how to execute. Uber had a guy who knew how to execute. They fired him. They have a guy now who's very good, but he's said that, his Robotaxi strategy is to buy other people's Robotaxis. So he's going to be a customer of Tesla more than a competitor. I don't think we're betting on non-existent Robotaxis. I mean, if you know anything about AI, AI can do a lot more than drive. We're talking about AI replacing, driving, any idiot can do. AI can do quantum mechanics. AI can do, advanced programming and physics. AI is one of the best computer programmers in the world. You think driving's that hard? No. Driving's disappearing. AI can drive better than any human driver. It won't be hard for them to do that. Regulation, well, who's regulating right now? Who's in charge? Oh, wait, Elon Musk is in charge. So I think it'll be fine. I think that, in fact, it'll be seen as unethical to allow human drivers because the robo drivers are so good. All right, so let's assume Robotaxi looks something like that. And I think this is, Waymo, some of the best investors in the world are in Waymo. I'm thinking about A16Z. And are really excited about Waymo becoming a 10-bagger. They're investing at a 50 billion market cap, not because they think it's worth 60 billion. They're expecting that whether it's Waymo and Google, this is Google's biggest bad, quite frankly, outside their core business. So, I think you're going to be doing just fine, assuming 250. I don't think that's too crazy, and I don't think that's too, again, the beauty of this is you can decide. Right? Your number. And I'm not saying I will live or die on this hill. I'm just saying, let's do this analysis this way for 5 minutes. We can do it a different way later, right? Just open your mind to it. See how it goes. Yeah, Waymo's private. All right. So, and again, we can sort of do these error bounds in terms of the worst case and the best case. So if you just think it's worth 50 billion and you just think all those 200 billion, well, you're now saying you're paying this for some amorphous asset $887 billion. Well, that sounds like it could be a good short. But if you also look at it the other way around, you are now getting $537 billion for free. You're already valuing the company at $1.7 trillion, and we're not done yet. So in my more middle of the road estimate, right, at 250, well, we've got 600 billion still not accounted for, if you will. Again, this is valuation. It's very inexact. It's a lot of voodoo. To the innovators that create companies, this is sort of a waste of time. But somebody's got to try to be an investor. Somebody's got to try to come up with the math, and this is the best possible way to do it. That's right. I'm the best. Period. We the best. All right. Anyway, what else is here? Well, there's a couple of big businesses. There's FSD, and there's sort of this question about, is FSD a software company or is it included already in autos? And so you could say it's already included in autos and say that the range is 0. You say, that's already in auto. I'm not paying extra for FSD. But you could argue that Tesla will eventually transition to become a sort of more of a software company where you get the car for free, and there's a subscription software piece where you're just paying for that. And again, I would argue more that that belongs in the auto business. But again, if Elon were here, he would say, well, I'm still going to sell these cars, but that FSD, when it's really truly autonomous, that's going to be a big revenue driver. So again, it really depends on how you want to look at this. But if you do look at it my way, or one way, and let's go to the model again. There are some hints in their filings of how much FSD they have for deferred revenue. And so I forgot the FSD pricing is. Do you guys know? There's no specific timeline. The timeline's infinite. For every company, you assume the company's going to last forever, right? There's no special, timeline that's going to make a difference. So if you assume that, who's got the prices for FSD? $8,000, and then there's a monthly subscription. So it's $99. So let's say 8K plus $99 a month. So it's $100 a month is $1,200 a year. And how many cars is he selling, or how many cars does he have extant, or will have extant, kind of existing out there in this, sort of pool? Well, we know they ship 2 million cars a year, roughly, or they will, roughly 1.8 million. So 2 million maybe next year or something. And so if you have 2 million times 1.2 billion, 1,000 a year, that's a $3 billion revenue stream. And you have 8K one time. Well, the 8K one time is less exciting because the installed base is going to be more than 2 million. They just ship 2 million a year. So at steady state, if the car life is, say, 5 years, you can have 10 million cars doing 1.2 thousand a year, which is 12 billion in software margin revenue. So this could be, 100 billion. So the FSD business is not going to really move the needle that much for Tesla, but it's not a bad thing to get. And again, whether or not you want to include this, and again, I think the best case scenario is even better, but let's say that's the best case scenario. I think this is probably just going to happen, period. Every car is going to have FSD, and every car is going to pay $99 a month to have self-driving. It's really kind of not that crazy to offer. Whoa, ion Q's falling apart. I'm going to nibble on a little bit. It does look like the quantum trade is finally going to pay us.
Water filled.
I'm going to short a little Rigetti, though. Although, you know, they're both kind of melting down. Is the market open? No, the market's open. Let's see if I can whip it. Let's take a break here. Okay, let's go back to Tesla since we were chatting about that. Okay, so FSD, somewhere between, you know, it's already in autos, or maybe call it an extra 100 billion. Because it's so small, I really do think we could just subsume it into autos. So let's just erase it. You know, again, I think you could probably, if you wanted to, you could just add 100 or 200 to the autos. You know, maybe round this up a little bit, or pick one of the, you know, somewhere between 440 and 840 for autos. If you're super crazy bullish, maybe, you know, you make your own line at home. But let's leave it at that. Okay, so what's left? 600 billion in value unaccounted for. It's basically robotics, right? I mean, you guys tell me, is there something I'm missing? Energy. Somebody mentioned superchargers. There's not, you know, a whole lot left. I mean, it feels like robotics is the main sort of gig here that's left. And I did a funny analysis in my head. Usually for biotech, what we do is we move we don't expense R&D because it's an investment. So when you expense R&D, you're really kind of penalizing the company when they're trying to create a valuable asset. So the R&D is you spend money on R&D to get a return. Otherwise you wouldn't spend it. So that's one way to look at it. Okay. Back to robotics. So let's say, you know, the robot's $60,000. And, you know, when I say the robot, I'm sure they'll have all kinds of robots and this and that, but let's dumb it down and just say they're going to sell 60,000 robots, and they're going to sell 1 million of them a year. Now, Musk has said that there are going to be more robots than people. So 1 million is very conservative. And given the, you know, how much utility the robots could have, I mean, you could lease a robot, for example. If you can't afford buying one outright, maybe you could lease one for $10,000 a year, and it could do all this work for you. So eventually, I do think this is going to happen. So 1 million is probably conservative, to be frank. But now you have 60 billion in revenue. And I don't know, let's say there's a 50% margin or something. So there'd be 30 billion in free cash flow. Put a 20x on that, you get 600. And so obviously if they do 10 million in robots, you could even lower the margins a little bit. You're talking about 5 trillion possible upside. Some of you may say this is all nonsense, none of it's going to happen, and you put 0 down. So if you take the worst case for everything on Tesla, it's got a lot of downside. It's got basically 75% downside. If you look at the best case for everything on Tesla, yeah, sure. You're then looking at you know, I guess a 5x, something like that. So, you know, is there a so I sort of intentionally set this to equal to 0. So the current market cap is correct if the following are true. You should pay a 40 times multiple on the car business, which I think is reasonable. Robotaxi is worth 250, which again, you may disagree, but I think that's reasonable. And robotics is worth 600, which again, you can disagree, but I think it's reasonable. So between these 3 things, cars, robotaxi, and robots, you know, it turns out that cars is just 1/3 of the picture. You're paying 2/3 of the picture, you're sort of paying for 2 startups. You're paying for a robotics startup, and you're paying for a Waymo-style robotaxi startup. Now, these are startups that have a lot of, you know, basically It's the richest man in the world, the most successful entrepreneur ever, one. And then two, in the Robotaxi startup, they got a lot of cars out there. They know how to make cars, they know how to make software. So they got a big head start. And then on robots, they do AI well, but I think robots is the sort of the riskier bet. But it's also, what if there are 100 million robots? And they're $20,000 each, and the world is just androids, tons of robots walking around helping us with our daily activities. There's a company called Figure that just raised at 50 billion. So I think at the very least you have to value Tesla, maybe at the very least 100 billion. Give it some credit for the robots, because a Figure who's never sold a robot is valued at 50 billion. Yeah, look, if you think Tesla's overvalued, you probably aren't. You probably don't look at investing the way I do, at least, and I think that's, for obvious reasons, I think that's wrong. Because if you think all future opportunities aren't worth anything until you actually see the revenue earnings, well, you're necessarily completely undervaluing all future opportunities. That's not the right way to do it. If you look at Figure, look, this is cool. This could do something. The factories and homes could use these. So at 50 billion, the people putting money in Figure are not stupid. They're taking a risk. Figure will either be worth $1 trillion, it'll be worth zero. But they're trying to do it, right? And you have to look at Tesla the same way. It's VC that's public. Now again, would you pay 600 billion for Tesla while other people are paying 50 billion for Figure? Kind of makes Figure look cheap compared to Tesla. But Tesla's got a big advantage. They got Elon fucking Musk. That's a big deal. And they have a lot of capital. Figure's got to raise capital. Hand to mouth. They have had AI for a long time, AI experts within the company. And they're used to making huge amounts of scale for machines, steel machines. So, it's certainly not real yet. It'll be a while before these machines will be around your house making you coffee and folding your laundry. That's still going to be some years. But the point is, if you follow AI closely, it really wouldn't be surprising if these machines could do all that, because they can do it in the text dimension. And the bet is, will their flexibility and utility in text transfer to the real world? And the real world's quite different from text. It's in some ways a lot more complex, but in other ways it's arguably not more complex. If you think about what requires more intelligence, folding laundry or doing quantum mechanics, writing the most complex programming that you've ever seen, writing assembly code in 1 second. I would say it's harder to do the assembly code, and that's why we pay people who can do that a lot more than we pay people who fold laundry. So I think you're going to have general purpose robotics. I don't think you're going to have the old way of I think that the old way of thinking is that, these robots will do one thing really well if they're programmed to do that one thing. I don't think that's what's going to happen. That's already happened. That's the past. Once the Rubik's Cube, when OpenAI did the Rubik's Cube example, the Rubik's Cube is pretty hard. I can fold laundry better than I can do a Rubik's Cube. And it solves the Rubik's Cube in 1 second. If you guys haven't seen that, let me show you. Well, this is an MIT bot, but let's see if we can get the original OpenAI one. This was done a long time ago.
When I started Walton Goggins Goggle Glasses.
So there's been lots of progress since then. And, basically the machine has to plan and like the tattoo. Okay, It's getting the feel. It's got the feel. Yeah, so ultimately, like, if you tell OpenAI, you are in a room, you see the box, you know your goal is to move the box from here to there. OpenAI will tell you in text, okay, I move the box. So translating that textual world into the real world, I don't think it's going to be that hard. Many people are working on it. That's why Figure is worth so much. Yeah, these have gotten better. I think the proof of concept. Yeah, a human that knows how to solve a Rubik's Cube is fairly quick. But this is good too. Yeah, I mean, again, that's the bet. I'm not saying that you have to bet that it's right or that it's going to happen. I'm saying that you have to give it some probability of success. If you're certain that the probability is zero, well, you have to look at both Elon and say he's an idiot, and then you have to look at the people doing Figure and saying they're an idiot, and that's a tough bet to make. At least give it a 5% chance of working or something like that. This was longer than 5 years ago, actually. So again, yeah, you can't have too much hopium. I agree with that. You don't want to turn into Cathie Wood, but you cannot completely disregard the future at all and say all these smart people working hard on this stuff, it's all for naught. You would have said that there's no way a machine can type to you and think. Well, OpenAI is doing a lot of revenue now. The whole world's obsessed with this stuff. So you have to be open-minded. And again, will we have general purpose robots this year? No, I don't think so. But you don't buy stocks for this year. You buy them for the perpetuity of the company's life. And to say that we never will have general purpose robots, I mean, that's a crazy thing to say if you ask me. Now, will we have them in the next 5 years? I'd say that's more of a 50-50. Will we have them in the next 10 years? I gotta say that's close to 100%. I mean, 90%. There are some things that, it's unclear if robots can plan well and things like that. But just looking how big the leaps were in LLMs in just a handful of years, it's sort of it did happen. So yeah, there you go. I hear Sam Altman in the back. And I think it's faster now. Let's see if there's the MIT one. But again, these are general purpose robots. These are not general purpose robots. These are specifically trained to do one thing. That's not complicated. Yeah. Yeah, 1 second. Less than 1 second. So it's not hard to have a machine do that. That's why the OpenAI achievement was more impressive, because it was an actual hand. Look at that. That's 30x slowed down. Look at how fast it. Let's look at this again. How crazy is this?
Solving in 3, 2, 1.
Oh yeah.
Solving in 3, 2, 1.
Oh yeah.
So, the point of general purpose is that, the machine can react to different situations and stuff like that. And look, I think that in the next few years, you might buy one of these machines and you might say, stupid robot, it doesn't realize that the dog is in its way. And maybe it runs over the dog or the dog barks at it or whatever. That's, that's just something that we're going to have to deal with first generation products the same way we dealt with the first generation cars were disasters. The first generation cars were, awful. So I think, what I predicted is coming true, it looks like. It's a Minsky moment.
Order filled.
I think.
Order partially filled.
I don't know.
Order filled.